the misnomer is when people believe that, more consumer regulation stops fraud. No, that just increases the fraud, because when you have additional consumer protections, then you have open-ended on the other side.
On consumers.
So, yeah, you may have protected consumers on one side, but then, there's someone on the other side that's unprotected.
Good morning.
Hello.
Back with another episode. A couple episodes ago, we talked about kind of generally the commercial and consumer market drivers. And you mentioned at the end that you want to go into more detail about what's happening right now. And I agree. I think it would be good, especially from your perspective, hearing from, in the seat you sit in looking out at the world, business world. What are some of the main things that are driving business decisions, business owners' decisions? I know there's some key ones like the election coming up and that kind of stuff.
Yeah, and for sure I've seen every 4 years during election cycle, you would have people that would pause and be like, oh, I want to see what happens.
Yeah.
And generally during that time, there wasn't too much of that.
Yeah.
The seasoned investors knew that whoever went in, it was kind of like life still goes on and there wasn't going to be as much
there weren't any
change
hard
in there.
Factors.
Correct.
Yeah.
Now there's a lot of polarization of, truly, what can happen in the business world. So, I see people just, we're not looking for a loan right now. We're holding tight.
Yeah.
More so than I've ever seen in the past.
And are you saying that's because of the election?
Yeah.
Okay.
And, yes, interest rates over the last 2 years have gone up.
Yeah.
But when you look at historical, and especially when you're on the commercial side, regardless of interest rates, there's other factors that go into it. The cost, it's how much can you net at the end of the day. So if you have enough margin, regardless of the interest rate, you're still going to move forward with the project.
Yeah.
But when you have knowing that, today is the September 18th. So I think it's the second day of the Fed meeting where economists are believing that, the rates are going to be reduced today.
Yeah.
The Fed rate. So, yeah, if you were thinking stuff a few weeks ago, you're like, okay, election.
Wait a week.
So that's coming in. So that's been a change too. So you've got the interest rates presumably going down, which, it looks to be that way, and the election, which now we're, under 2 months. So not a whole lot's going to happen. People are just going to keep their money safe. And, in September is like the worst buying month ever,
Sure.
Maybe a good time to.
And it's hard to predict what's going to happen after the election either way. Because who knows? We had COVID.
You could have turmoil.
We had all kinds of stuff happening. So.
Correct. Everybody just going to.
You have to just roll with it.
Unfortunately.
Yeah, I know.
Unfortunately, because regardless, your opponent wins, there's still probably going to be, loud voices on the other side.
Well, and there's trickle out effects that can happen over months and even years of things that were put in place, and there's trickle in effects of things that we're going to put in place that take time. So,
and in our industry, what's facing the banking industry, of course, interest rates, when they moved up. The benefit of the banks that had excess liquidity were able to make more in overnight funds.
Gotcha.
So you had some prudent banks that were able to, do better during that time. And then others, they had locked in so much that they didn't do as well.
Yeah.
But all in all, the banks have fared pretty good during these rates. A bank should be able to, earn revenue during each time. But what I've noticed banks have been doing as rates go up, your margins between your costs and your deposits and your costs of your loans need to increase as well. Because, when you have foreclosures in a higher rate environment, that takes a higher percentage off the top because you're locked into your deposits at a higher rate. So, if you got $1 million loan that went south and you're still funding, long-term deposits on that $1 million, when we're in a higher rate interest environment, you may still be paying, 5% to where it could be 2%. So, I didn't see really banks do that. And now the biggest push is just, fraud. You see it. Businesses are getting defrauded. Consumers are getting frauded. And a lot of consumers are doing the fraud as well, which is not being talked. So fraud is huge in the banking. And a lot of the big banks are very horrible on their back end as far as responding bank to bank inquiries. As you know, when a check is deposited here and that it's known fraudulent, who should be paying?
Yeah,
you know, there was just some orders put down on one of the big banks that just, you know, they weren't responding to other banks. They weren't doing this. They're paying at the last second when it was like the law's in place. Just, you know, we all need to be efficient paying each other back and forth,
right.
you know.
Yeah.
All these frauds, nobody likes it. So I think that's a huge push in the banking industry of, okay, how do we combat the fraud? How do we combat that? And there should be. So that's been, you know, a huge phase.
Yeah, both on the business side and the consumer side. Okay.
And it needs to go back, you know, because what, you know, the misnomer is when people believe that, you know, more consumer regulation stops fraud. No, that just increases the fraud, you know, because when you have additional consumer protections, then you have open-ended on the other side.
On consumers.
So, yeah, you may have protected consumers on one side, but then, you know, there's someone on the other side that's unprotected.
Sure.
And, you know, you don't think fraudsters follow, you know, the consumer laws and take advantage of it?
Yeah,
that happens all day long.
It's just like the landlord-tenant relationship. If the tenant, you know, in Florida for a long time has been, you know, they side on the side of the tenant, then the landlord is out. If the
then you just squat for years and you can't get them out of the house.
Which I think they reversed that.
Correct. Yeah,
which is great.
So, you know, you got to be very careful. You know, so many consumer protection laws don't necessarily protect the consumers. You know, it's just an illusion. So all they do is enhance the fraudsters. You just give a veil of protection a lot of times.
Yeah.
So you know, there's a better way. There's got to be a better way.
Yeah.
And so I think that's up to the banks to take back some ownership and, you know, create and look at, you know, some additional ways to do it.
What about consumer confidence in the market?
You know, I don't have enough conversations in regards to consumers as far as like stock market. You know, I don't see that side of as much, but in general, I think, you know, and from my own perspective, I'm amazed that the values are as high as they are from what I see how businesses are actually doing with their costs up and their expenses up and, you know, their margins are down. So, you know, is the stock market higher because of inflation, which would cause the value to go up? So, you know, I think there is skepticism out there with the true blue. Well, that's probably a bad saying, you know, but the true, you know, small business American, you know, there's skepticism out there in the stock market. I mean, it is. There rightly should be. I mean, it is perception of the values. You know, they're not all based on actual tangible earnings.
Sure.
So,
you know, they're not truly based on the value.
For everybody that lives on tangible world of, you know, the money in your bank account, you know, there absolutely is skepticism. I've got a degree in finance and I have skepticism in it. It's still a dart throw. I mean, because of, you know, the manipulation and the value of buys and sells that can change it. So you are at the whim and you can make the best decision and something out of your control, just eliminate it right away. So.
Yeah, I agree with all that. And when I think of consumer confidence, I think of inflation since we're in a higher point of inflation.
Oh, that's down. I mean, everywhere.
Yeah.
It is extremely down.
Because that's the practical side of things. I'm going to go buy a candy bar or, you know, milk or whatever it may be.
But
I'm making a different decision.
But I don't visually see people changing their buying habits, which is just blowing my mind.
Okay.
I see them, the margins going and they're depleting, but I think they're increasing their debt and not cutting out
consumer
the stuff. I don't see it. I mean, which is amazing. I've cut out my own self of things. Just think, you know,
because you have.
I do well. I pay attention of whether or not I'm going to spend money at Starbucks.
Yeah, you have a prudent mindset, and in part because it's who you are, but also in part because you're in banking.
But I mean, you've had it. How much joy is that going to give you? I mean, not being able to pay your bills, not having. I mean, that's going to give me immense pain.
Yeah.
But you know, it's just amazing. People, I don't see them changing their habits because we've created years of culture of
Like I deserve this.
Yeah.
Right.
And people weren't making money on their money. They weren't earning in savings accounts. And so that's the anti thing, in a low rate environment. Sure, you can borrow money, but you create horrible habits.
Mm-hmm.
But at least if you have a savings account earning 4 or 5%, that's great. That encourages.
Right.
30-year mortgages now, they're 6s and 15, 5, 8s. That's, I think that historically that's great.
Yeah.
Because then you should pay it off. That is fine. Mm-hmm. Because, I'd hope that they just don't lower the rates down to, 1 to 2%, spur something back. No, that's not good overall. You just can't have.
Yeah. Well.
So, but it is, businesses, they're so scared because, to get political, the ideas that the left are throwing out just don't work, and they don't have the implications. It's not going to affect the hardworking Americans.
Well, they
just simply not.
Historically, they don't lean towards pro-business. So
no,
that's not a foreign concept. I think
it's just amazing, and the idea of like, $50,000, expense to startup. Well, that startup has to have $50,000 to begin with, but it is easy to start a company in the U.S. It's the easiest country in the world to start a business.
True.
It's simple. The problem is the government regulations after you started that business and after you've got 5 employees and all the other crap you have to do after that sucks the life out of you.
Yes.
It's not the startup.
Yeah.
It's after that. It's the longevity. So it's just complete bullshit.
That's funny you said that because this morning I was watching a video on this is literally a rabbit trail, but ties in. I don't know if you've heard of Joel Salatin. He's Polyface Farms and big proponent of permaculture and farming, and says everybody should have chickens. And
I love that stuff.
Like he's like the kind of godfather of farming, and like regenerative farming and that kind of thing. I was watching a video. He was talking about how any person with a 500 square foot garage, they were talking specifically about chickens and rabbits, and chickens for eggs and rabbits for meat. You could utilize the cubic space, so you could have chickens or rabbits above in cages and chickens below. And there's this whole bedding. He had this whole system, which I love because I love the systematic approach and everything. And so, to make a long story short, he said in a 500 square foot garage, you could essentially create a business that makes you $32,000 a year selling eggs and rabbits for meat. And I thought, there's a lot of people are going to hear that and think, that's awesome. Like, this is going to propel me even more into what I want to do. Right. I think what they're going to get met with is what you just said is, yes, okay, let's say that conservatively all these numbers work out to $32,000 a year and you want to do this on the side or whatever. Aside from your upstart costs, because there's going to be upstart costs, cages, feed, et cetera. Then you have the actual cost of raising them, not including your labor that would never get factored in because you'd never make any money. Mm-hmm. But then you have the regulation, because if you actually want to sell one of those rabbits to the public for meat, it's not just for personal consumption. And you have to come get, all the people got to come out, look at your stuff.
You could be doing it the safest way.
Yeah.
But the issue is if you can't prove it and have that checklist that when they come in and see it and visualize, it doesn't matter how good you do. That's what they're going to focus on.
Yeah.
And
so I just thought that was funny because I was like, okay. For the first year, you probably would lose $15,000. Second year, you might break even. Third year, you might make some money, but you really still didn't make any money because all your labor's in there.
I was thinking you'd go the opposite way. I was thinking I could save $30,000 a year buying food.
But that's the calculation is way too much food and way too many eggs. It's like 1,500 dozen eggs or something it would produce. But I mean, the whole point of what he's doing is...
My daughter has a pet rabbit, so there's no way we could eat rabbits.
If that's the trouble with Americans is that, if we didn't have that emotional... Yeah,
I love chickens. We've had them.
But if you scale that down even more to like 100 square feet or 200, then you have something that's for personal consumption. Yeah. And that whole system is a beautiful thing that really everyone should have something similar to that. And there's no regulation because it's just for personal consumption.
Yeah.
So, but that's what happens.
Back
in the
to
market.
it. If they want to help businesses, let's eliminate a lot of this business BS that they have to do. Now, granted, banks are regulated and we need to be regulated, but there are antiquated stuff on the banking side that we should eliminate too and go back and, enhance and change and make it to today's scenarios. But that's where I think, the focus should be made on after the fact because, this day and age, how hard is it to maintain a profitable business and then you're in year 3 and 5, the excitement's waned, and in order for you to grow or to add more people, you got to expand your margins because of all the extra new compliance that just hit because of the bad people already out of business, and then it just hurt you.
Yep.
So
it's like an additional tax on top of. I mean, that's really what it is when it comes down to your time and your resources.
Instead of just penalizing the people
tax.
that were bad to begin with in an industry,
yeah,
and that are already out, they penalize everybody that's left and was doing it right. That's what ends up happening.
Right.